please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Alright, as promised, we're going to talk about a lot more numbers now. Shalimar Paints is the stock on our radar. Weakness continues for that company. It's the 6th straight quarter of posting a net loss. Surender Bhatia, the MD of Shalimar Paints, joins on the phone line to talk about that. Mr. Bhatia, good morning. Not looking good at all. I mean, so many quarters of losses. This quarter, the revenues have fallen almost 20%. This at a time when a lot of your peers are doing much better. What's going wrong, and should we write off the next couple of quarters as well?
No, actually, what was going wrong, like after our Nasik fire, so we were left out with one plant, and then another plant was, we made it operational in Chennai. So we had a supply constraint.
Okay.
So now we are coming out after our successful right issue. We are coming out of the supply constraint, and we are picking up on the revenue. And naturally, with the pickup of the revenue, the other things will also improve.
So how many plants are functioning at the moment?
Right now, 2 plants are functioning.
Okay.
And the 2 plants we have fire, like one in Avda and Nasik. But we are starting those 2 rebuilding. So we are expecting like Havda should be operational partly in last quarter of this financial. Nasik should be operational first quarter of next financial.
Okay.
So we are hoping for that, yes.
Mr. Bhatia, what will the promoters do about the rights issue if it is not subscribed? Will you all be willing to increase your stake in the company?
So which right issue you are talking? The
You were
upcoming?
Yes.
Okay. Yeah, so naturally this right issue will be subscribed because promoters are fully confident in the company, and that's why we have come up with this right issue. So naturally.
Will you all be upping the stake in the company, increase the stake? I mean, if you need capital for expansion.
Yeah, if required.
Okay.
Okay. So what will you raise these funds for? I'm just trying to understand what is the capex plan that the company has over the next 1 year?
We are rebuilding fresh the Nasik plant.
Okay.
So and then we are partly restarting our Havda plant, and then some modification of existing plant in Secunderabad. And so one is the capex. Then because we want to increase our revenue, so we will require more working capital, and then some is for general corporate purpose. But that information will be public once our document is approved with SEBI and others.
So the last time when you spoke to us, you did indicate that you're keen on getting a foreign strategic investor on board. Anything has happened on that front? Anything in this calendar year?
Sorry, which investor?
The last time when we had spoken to you, you had indicated that any strategic financial investor is what you're looking to get on board in the company. Anything that you have finalized at all?
No, but I have not spoken to you about that. Okay. I think so, but yeah, so these are our market speculation, so we don't comment on those actually.
Okay. When will you get into the black, sir? You know, in the last 5 years, there's only 1 year you've actually reported profit, FY16. So, I mean, should we expect that you will be in the black this year, or will it take 1 more year for the capex to bear fruit?
So, you will see the quarterly results and the progress on that.
Okay.
So, I can't comment on the future, but you will see the progress on the coming quarter.
We will look forward to that. Thank you very much, Mr. Bhatia, for joining us with those details. Well, let's get one more large set of number that came yesterday, or important one. Aurobindo Pharma, it's off lows this morning, but it's still trading with a cut of 4%. Clearly, the street not enthused by the management's commentary in the conference call that we cut to, if you remember, just about a couple of hours back. Ekta is here to tell us what were the key takeaways from that conference call. Ekta.
Well, yes, a couple of key takeaways from the Aurobindo management in the conference call included that the injectables business declined in Q4 of FY18, mainly due to recalls. However, they have received an establishment inspection report from the US FDA for their Unit 4, which is their injectables unit, as well as Unit 12. However, they will get more clarity once product approvals begin from Unit 4. The antiretroviral business, which declined around 40% on a year-on-year basis, was impacted due to pricing pressure. Now, coming to the US guidance, they said that they can't really give any particular guidance for the US except that it would grow. They expect the US price erosion to be around 8% and however to stabilize at around 5% going forward.
Okay, thanks a lot for that. So there is pricing pressure that could continue, although it could be perhaps less than what it was before. But let's do one thing. Let's talk about one more company now. It's a weak showing by NLC India, led by an exceptional loss of 160 crores. S.K. Acharya, the chairman of the company, joins on the phone line to talk about that. Mr. Acharya, good morning. I'm just looking at your standalone numbers. Your revenues are down 10%. Profits have fallen in this quarter. Just help us understand what went wrong. There's been a lot of EBIT erosion as well, both in lignite and in the power generation segment. Is this something that you can expect even as we head into the next few quarters?
Good morning. It is nothing alarming. In fact, if you see in our turnover, we registered a figure of 8,492 crores as against 8,652 crores of last financial year. And here we a decline upfront is 1.81%, but that is mainly because of the power surrender which impacted us by around 783 crores. But also voluntarily we passed on a benefit to our consumers to the tune of 750 crores. If we add up both, in fact, the turnover itself, there is an increase over the previous year. So nothing to get alarmed about.
Okay.
So it is that loss you were telling, this loss as such, as I told, huge impact coming from the power surrender.
Yeah.
And since we are a mining and power company, my lignite doesn't get used when the power surrender takes place. So both the things have to be restricted to that. But at the same time, I also gave to the consumers 750 crores. If you add that up, then our total turnover would have gone up to 9,242 crores.
Okay.
Yeah.
Okay. Mr. Acharya, we now see merchant power rates inching up. Is that going to have a beneficial impact for you? Can you at all take advantage of it first half of FY19?
Yes, in fact, we can gain out of that. But again, in Indian power scenario, what is important for a power generator is to remain absolutely competitive. In fact, in our merit order generation, if we see where we stand, we have to better our position.
Okay.
And that is what we have started doing it by controlling our cost.
Okay.
In the year beginning, you must have noted, we reduced our lignite transfer price by 100 rupees per ton.
Okay.
And yesterday we took a decision to reduce it by 200 rupees per ton further, so that the ultimate benefit to the consumers will go something around 30 to 40 paisa per unit.
Okay. That is positive, I agree. But, you know, this surrender of power is also a bit of a political exigency. Is there any chance that you may have to do it again?
No, it is not political exigency. It is when I'm available for power generation and the demand from the DISCOM side comes down, mainly because sometimes here in down south, the wind power picks up.
Yes.
So wind power being a must run and the priority is given there. So they surrender our power. But as I told, once we are very competitive price-wise, so this is. But of course, last year was unprecedented because in 16-17, we suffered from surrender power loss was to the tune of only 1,300 million units.
Okay.
As against that, 17-18 saw a power surrender of 2,560 million units.
Okay. Okay.
So that was the major impact.
Okay, so you don't expect that kind of surrender or wind power substitution this time?
Yeah, but if you see the performance-wise and if we compare the performance-based profit here, in fact, the growth has been to the tune of 9.43. Because if you see our bottom line, 16-17, we showed a profit of 2,368 crores, which included a windfall gain of tax and regulatory benefits of 679 crores because we transited from INGAP to Ind AS. But this year, without that, if we count apple to apple compare, we are up by 9.43%.
Got it.
And our EBITDA has gone up by 23.3%.
Any acquisitions that you are looking at? Any of the stressed assets that you would like to acquire in this calendar year?
The GMR one in particular?
Ma'am, it has been a long story. Things are going on. Nothing has been regretted yet, but nothing has materialized yet.
Anything other than GMR?
We are on the look. DBC was a promising thing, but DBC, they themselves, because of the delay in clearance coming from West Bengal government, they themselves wanted to go back, stating that the scenario has changed. They would like to run that asset themselves.
Can you just tell us a bit more about the balance sheet then? What is the debt situation currently, and are you facing any kind of, pressure as far as receivables are concerned?
Absolutely not. In fact, we were under leverage, and now we have reached 0.66 so far as D is concerned, and we don't find any difficulty. And with our big addition coming from the solar side, recently we added 300 megawatt, 200 megawatt further in the pipeline. And also for 700 megawatt works are going on. And our 1,000 megawatt lignite-based power, that will be commissioning that plant in the month of July.
So you said 0.66.
There will be a lot of additions you are expecting.
Sure, you said 0.66 times for debt equity. What's the absolute debt figure now?
The exact figure I don't remember, ma'am, but we are comfortable. And as it is, our realization from our SEBs also are good. So that way, no issue on that.
All right, we'll leave it at that. Thank you very much, Mr. Acharya, for joining us with all those details. That's Neyveli Lignite, but the markets at the moment are on a weak footing. About 1.3 stocks. Advanced decline not doing too badly. That's because the mid caps have stolen a march over the large caps. But let's see if this advantage holds. Just take a look at the bond yields. That is the only niggling problem at 7.76. That uptick coming probably because of the MSP prices. These and other issues to be discussed on Chartbusters. A lot of trading ideas also coming your way. Thank you for watching Bazaar.